You know, we had actually exited out of Facebook in all but one account with a low tax basis. So it had not been trading well, and we had just preferred other names like Google, Microsoft, also Twitter. You can go into some of the financial names as well that are more tech related, just because they were trading better. In terms of what we're looking for, you know, our trading range right now on Facebook is about 315 to 351. So the odds are in your favor, 1.5 to 1, and there's an implied volatility premium of 13%. And so what does that tell me is that people are paying a little bit for protection, but not that much. There's no real short interest in the stock. So what Facebook prints tonight is really what's going to drive the stock. And we don't like that open the envelope type approach. So we just said, let's stay on the sidelines till we can get a better sense of what's going on here.
Wonder if they'll announce a name change as well. Facebook floating that as, I don't know, a distraction or what?
Yeah, you know, maybe the same way that Google went with Alphabet. Yeah, and then it sort of encompasses their metaverse activities as well. Unclear. But
Elon Musk tweeting about the $1 trillion valuation. Unsurprisingly, just got a tweet. Wild 1T times. One times.
Isn't that
Wild
creative?
Times. That's good.
Yeah.
It's really good. Are you a Tesla shareholder, Nadine?
You know, we have had clients with Tesla in it. It's in some ways a little bit more volatile than we like. So it's not a core holding in any of our portfolios, but hats off. Love the Hertz announcement. It just shows that there's strength in demand for the company. So I think that was a really positive announcement today for both companies.
All right, Nadine, I'll stay with you, though. You know, you explain why you don't own Facebook in most of your client accounts. Why do you own some of the other names that we know well, or if you do? For example, Microsoft, we've got Apple reporting later this week,
sure,
and Alphabet as well.
Sure. Well, there's three parts to our investment framework. The first is the macro. The macro has a good setup for tech, just like we were talking about today. Energy is doing well, so that's a reflationary trade. When the growth of GDP is accelerating, the growth of inflation is accelerating, tech can do well, megatech can do well. So overall, we like that. Microsoft has been a solid citizen. It doesn't hit the headlines as much as someone like Facebook. It's not as dependent on ad revenue or supply chain problems. We also like the we've owned this company for years. The Azure basis to the cloud for over the last decade. We've been a big believer, and they've delivered. So something like Microsoft we like, but it is trading towards highs. So, you know, it's gained 40% this year. It's going to be about what they report tomorrow. That is important. We've also owned PayPal. We're really glad. One of the key news today is they're not going after Pinterest. We were not a fan of that. The stock was up 4%. We like that fact. And also Twitter. It's trading neutral. So when you look at the names, Microsoft is bullish. Google is bullish. Amazon's actually neutral, but Facebook is the one that is a bearish trade. So we have a really hard time getting in, even if it's at the low end of our trading range as a name like Facebook. It means it's a really choppy way to trade that stock versus something like Twitter. If it's neutral, you know, our range there is between 60 to 68, so it's 2.8 upside to downside. There's no real short interest there, but it has an implied volatility premium of 29%. So it means a lot of people are protecting that name. So if they have any kind of positive momentum, you're going to see that stock go up higher than a company that maybe is trading at a discount, not much people paying for protection. So here we like the setup for something like Twitter versus a Facebook.